Hey everyone, welcome to the Everyday Investor. I'm catching up today with Michael Every, global strategist at Rabobank. The Middle East situation, which is currently unfolding, is both distressing and fascinating from the point of view of an investor at this point in time. Ignore it if you need to for your mental health, of course, and definitely don't watch this episode today if you suffer from any anxiety already with what's going on. But for those that are brave enough currently to look outside and see what's going on, I feel there's a lot of value in understanding that, so that not that you can trade and make a profit of that, of course not, but just so that you can understand potentially what might be the new investment paradigm of the next 40 years, given the last 40 years increasingly feels like it's being thrown out the window. I hope you enjoyed this episode. I'd love to hear your comments. So please be sure to make a comment in the section below and give us a like and subscribe while you're at it. Let's get started. All right, Michael Every, thank you for joining me today on the Everyday Investor. How are you?
Not too good at the moment, but I think that's true for a lot of us.
Yeah, absolutely. Well, we'll get stuck into that as we get on to this discussion. Now, you're the global strategist for Rabobank. So can you tell our audience just what that means and kind of what a typical sort of day in the life looks like for you?
Okay, typical day of life at the moment means not enough sleep and just following the news cycle constantly in between, reading journals, academic articles, talking to people around the world, looking back on previous work I've already done and thinking, goodness me, this slots into it painfully accurately. But in terms of what my role specifically means in terms of a structural organization, it's a bit of an odd one in that I don't forecast FX, I don't forecast rates, I don't forecast equities, I don't forecast commodities. I don't really forecast anything per se, but my job is supposed to be to talk to all the guys within our team who do those things, having done many of them myself over the years, and have a kind of a methodology of a structural overlay of how they all interact with each other, which is cross-geography, cross-asset, and cross-disciplinary. So it's a little bit more complicated than just saying I read the news headlines and then I just copy and paste in other people's forecasts. So, I have intense discussions with them sometimes saying, really, because if you look at X from this angle, maybe you might want to be moving it in direction Y or Z, but entirely up to you, your call.
Yeah.
But it's a lot about trying to understand the larger narrative at play here and then project that forward as a kind of a thought framework for other people to start thinking about their own forecasts within.
That's a good explanation. Thank you. And I think even when you boil that down to like the micro level, even just everyday people, especially at the moment, I think of this from my perspective, there's a whole bunch of things that frame my thinking and how I view the world. So I guess largely what you do is probably similar, but at a much larger organizational scale. Think about things like, wokeism, modern monetary theory, Keynesianism, global events and how that changes the world. And then bringing it back down to how you make everyday investment decisions, that can be really, really tough. So I guess just to further put some color on your worldview, that would be kind of good. I know that you've lived in a lot of places, you speak a lot of languages, and so you've got a very broad perspective. Can you just give us like a real quick snapshot of your background and what some of your interests might be, just so that we can understand where you're coming from as we get into this discussion?
Yeah, sure. Start with the real frothy stuff. My interests, I don't have enough hobbies, unfortunately. I do too much of what I'm doing now. What I used to enjoy before the world really went off of a cliff was cinema, which has kind of disappeared as an art form, unfortunately, at least in the English-speaking world. Eating out, which obviously had a couple of bad years up until recently. And, also just relaxing, just binge watching something good on streaming, which is increasingly hard to do as well. I find myself watching stuff in the 70s and the 80s much more than I do anything that's been made recently. But that's just me. And of course, meeting friends if I can. But again, that was difficult up until recently. In terms of how I see the world, well, look, I speak a lot of languages badly. I don't want to ever try and put myself up there with these people who are truly polyglots. But for someone who grew up only speaking English, I can hold my own, for a wee while. Yeah. But I come from a slightly different perspective in that I was born and raised in a Marxist family, which is something I tell some people sometimes, but not normally off the bat like this. But that is not how I see the world. I want to make that abundantly clear. But I understand how Marxists see the world. And it is actually a staggeringly useful framework, both for understanding social trends at the moment and political trends, but also as a critique of our current economic system. Because I can assure you, Marx doesn't have any solutions for what you should do, but he has a long list of things you shouldn't. And that's sometimes just as useful. It's been a very interesting set of lenses to wear to look at the world for decades. And sadly, alongside that, for a very long time, I've also been interested in Lenin. And if you ask me to summarize in one bullet where I think we are now, you were alluding to some of the modern monetary theory, wokeism, et cetera, et cetera, et cetera. These are just two of many things that I look at and have written on. I think we've moved from a world where the primary driver was Marx, and that would be a world of what we used to call lower for longer, where you don't have enough demand, where big business has all the money, workers don't. And as a result, you have very low interest rates and very low inflation. That's where we were. And for a few years now, I've been trying to summarize to people, no, we're now in a revolutionary phase of Lenin, where that's breaking down. It's breaking down within countries. So you're getting, violent political polarization and attempts to try and forge a new paradigm, which are, turbulent, shall we say.
Yeah.
And on the other hand, internationally, you see a collapse of the US-centric free trade order.
Yeah.
And you don't yet have a model emerging for what's going to replace it, other than, something quite brutal and zero sum. So there you go. I hope that has some kind of use for the listeners.
Yeah, I think that's really good that you put that out there straight up so that, people aren't kind of immediately defensive. Let's maybe start with some of the current ways that we think a little bit. And this would absolutely include myself, which really started to change probably around 11 months ago when I first had my conversation with you. And I know that conversation, I'll link to it in the show notes for people to check it out, really resonated with a lot of people because it provided the other side of the coin that we just don't get delivered by our media. And like we've seen probably in the last week, actually, just how an accidental post around a launch of a Bitcoin ETF and a failed rocket attack, like false news, fake news, misinformation can actually get out there in the mainstream really quickly. But more than that, we've kind of had this narrative that since the 80s, interest rates just keep on coming down. And it has been true. There's been cycles throughout that period of time. But in your view, would you suggest that we're seeing more of a secular shift?
Absolutely. I was a very early proponent of, what was called lower for longer. I've been arguing that, or I was arguing that for coming up for nearly 20 years. So a long period of time, through many iterations when people kept thinking that rates were going to go back up, that inflation was going to come back, that growth was going to bounce back. It was very easy to retreat back to the kind of memes that I was taught as a child, which is, okay, there's a factory full of workers making cars and being told, look, they'll replace them with robots, at which point who's going to buy all the cars? And there actually is genuinely some logic in that because, the only much more technical debunking of that you can do is from the likes of Safa and Oshikio, and I'm sure most listeners aren't aware of these, but people who know the economic literature will, who say, well, yeah, but that's productivity enhancing, and providing you redistribute the gains of that productivity fairly throughout the economy, then the capital keeps circulating. We're all good. And of course, that never happened. None of those gains got redistributed. They all went into fewer and fewer pockets with greater and greater agglomeration and concentration. Ergo, we ended up with lower for longer. Once we saw Brexit and Trump happen, both of which I kind of alluded to would happen at the beginning of 2016, and Trump in particular, I was actually telling people, look, he is going to win. And I was laughed at because nobody could believe that was possible. But once we saw those actually transpire, and in parallel, by the way, in China, the appointment of Xi Jinping, which was a Chinese inversion of that, it was pretty clear that we were going to have an end of the paradigm, which is all of those imbalances are resolved by the fact there's one country in the middle where people just keep borrowing more and more and more and more and more to make the system balance out. And once that broke down, then the long run of history is one where free trade is destabilizing, as Marx argued. It leads to revolution, he said. And where you return to the pattern that we're now seeing around us, which is one of violence, whereby everyone thinks if we don't have someone at the middle to make the system clear, I want to be moving up the value chain. I want to be exporting more than I import. I mean, I'll import some things, absolutely. I'm not going to try and do everything myself. I'm not stupid. But I want to export more than I import so that I've got all the good jobs, all the juicy parts of the value chain. And I'm going to fight tooth and nail to get them. And the countries which, of course, have only got raw materials will say, well, hang on, why am I selling them to you raw when I could be adding value and processing them and having that value myself? And effectively, every country starts to say, I'm going to operate like a company rather than part of a network where, look, I can run a large trade deficit. Doesn't really matter. I get what I want from other countries rather than making it myself. But I can get easy access to a global flow of US dollars, which are cheap. And that allows the whole system to function. Because once that starts to break down, everyone wants to try and do what they're doing, which is inflationary. And as it's inflationary, interest rates have to rise. And we're in a higher for longer environment.
So effectively what you're saying is that we're shifting out of a regime where the US, where the US is really centered to it all and critical to the entire piece. And they have been consumers so that they've been soaking up all the excess production of all these other nations, right? And
correct.
Is that pretty much it?
That's pretty much it. But also they're doing that with a Pax Americana envelope over the top. So everyone understands you don't need a big military. You don't need to fight wars anymore. America fights small wars for us every now and then to try and keep everyone within this system. But when you're within the system, don't worry about things, because at the end of the day, the Americans buy everything from everyone, 2, 3, 4 stages removed from what I'm buying or selling. And there are always dollars to keep everything working smoothly. But very, very clearly now, you have that breaking down at the center of the trade matrix. And you have political rivals to that Pax Americana emerging, all of which are saying, well, we'd rather have our own sphere of influence where we control the value chain. So whether it's relatively small economies compared to the US, like the Philippines or Indonesia, saying, yeah, we'll still sell nickel, but we want all the value to be added in our country. So we want to smelt and process nickel here, then sell you the value-added product rather than just here's raw nickel. Whether you've got it at a mild stage like that, whether you have it obviously in China where they're saying we want to move up the value chain as fast as possible, as they are with green technology, as they have done, in fact. And we want to be the factory for the world and everyone buys from us and we don't buy from them except for raw materials, which is what China's been doing. Or whether you have the Russian model, which is basically let's make Russia great again and make it even bigger and bigger and bigger and blackmail people with commodities. All these are different iterations of the same thing, that the central ideology that free markets and free trade is the way to go have gone, because the country at the center of it realizes it doesn't work for it. And it doesn't work for it at the center of it because the gap between rich and poor gets too wide. American cities start looking like Brazil, with favelas and just poverty all around you. Yeah. And you can see that the system is crumbling within the core of the system. And at the periphery of it, other people are saying, we don't want any part of this. We can make a better system that we are central to ourselves. And that environment cannot be low inflation. It can only be inflationary on a wide variety of fronts. And as a result, interest rates have to go up too.
Yeah, and that's kind of ultimately where this goes. Like almost every thread that you pull on seems to come to that logical conclusion that interest rates have to come up. But just going back to the US, let's say the US does shrink back. Would that then imply that any of the posturing that we see on the geopolitical sphere, any of the financial moves that it's trying to make, almost like in a sense to keep the status quo going, would it be fair to say that resistance is futile?
Oh, I think it's futile, but I think it's futile in that the US itself no longer thinks that system works. And that's the critical point. And, about 15 years ago, just after the GFC, I was, having a frenetic debate with an in-law of mine who was a big believer in this one world system because, they genuinely saw for the first time in history, we didn't have much war, give or take, the odd US episode. And we had one global system. We were moving towards this kind of unity, and in their voice and their view, this could only be good because it's better than what we'd had prior. And I said, look, I agree, except for the fact, look what it's doing to the US. You're hollowing out your industry at an incredible pace.
That's right.
And by doing that, you're not just destroying blue collar jobs, you're ultimately starting to destroy your physical strength, which is what builds your war machine, which is what keeps you in the top dog position, which allows you to impose that system on others. So ultimately, it will contain the seeds of its own destruction. And I said at some point, you will elect a president who's going to put a 40% tariff on China and say, we want our jobs and our industry back. And again, they were completely opposed to this view and said it would never happen. Well, I was 2 presidencies wrong, or 2 presidential terms wrong. Obama did no such thing. But along comes Trump, and he does exactly that kind of thing. So the US itself doesn't want to rebuild it. Even Biden is attempting to now maintain what is defensible, or a defensible perimeter, in terms of, okay, we recognize we can no longer do X, Y, or Z, but we still want to hold on to A, B, and C.
Yeah.
And Biden, in terms of trade and in terms of industrial policy, he's infinitely more Trump than Trump. And he's even making the very strong argument, more bluntly than Trump, that I want higher wages. So Trump was seeing higher wages through a much more supply side program of tax cuts, and just thinking that, animal spirits would get wages up via low unemployment. And that was working. Biden's saying, okay, but we can do this via tax policy, via tariffs, and via industrial policy. And by the way, both are perfectly viable as options. I'm not trying to pick a winner here. But either way, you get higher wages. And if you get higher wages, you get higher inflation. And again, you get higher interest rates.
Correct. Yeah, another one of those threads. And then another one recently, I think it was just in the last few days, Janet Yellen came out saying that the U.S. could absolutely afford a war on multiple fronts. So I'm not sure where they're finding this money from, but obviously they're borrowing it. And what does that do for interest rates, Michael?
Well, let me just unpack that quote for a moment, if I may.
Sure.
I'm not a big fan of Janet Yellen. I didn't think she was a very good Fed chief, and I think she's an appalling Treasury Secretary. She's a great counter-indicator, to be honest.
Yeah.
And one of the reasons why that quote is important is it displays her thinking. I am positive, without ever having spoken to her or interacted with her, that she has made that quote not looking at the US debt servicing position, where more spending is now going on debt servicing than it is on the Pentagon, even before we have 2 wars. Not that. I think she's basing it on a 1942 screed by John Maynard Keynes, who a lot of people dismiss immediately, but he did say a lot of very important stuff. And basically, he was saying anything that we can do, we can afford. That was more or less what he was arguing in this screed. And what he meant by that during wartime was, if you've got excess capacity in your economy, you've got unemployed people, you've got factories sitting idle with capital stock not running. As a government, you can say, of course we can afford that, because we can do MMT, modern monetary theory, or we can just borrow, one or the other. You can monetize it or you can borrow. Spend that money into the economy, and you will mop up that unemployment, and you will mop up that spare capital stock, and you can do it. Now, he's right. And that's a lower for longer world.
Yeah.
Being addressed by fiscal policy or monetization within fiscal policy. That doesn't work if you don't have any spare capital stock and you have very, very low unemployment. So if everyone who's working, who wants to work, is working, and there's no one else to use, and if you don't have the factories anymore, what's going to happen when you try and run 2 wars or 3? Well, you'll have to build more factories, which is inflationary and stimulatory, and that's happening. Yeah. You'll have to pay people a lot more, extra overtime pay, etc., higher wages. That's happening. Yeah. Or you might have to import some stuff, but that doesn't work too well in wars. You need to rely on yourself most of the time.
Yeah.
So, in other words, the physical economy can't cope with it, not the financial economy, and that's a higher for longer world again. And thank you for raising that quote, because I really think it's more important that people realize it displays the fact that at the highest level, key Washington decision makers still think we're in the past paradigm, which is Marxist, not in the present one, which is Leninist. and which is much more inflationary.
Wow. Okay. All right. Well, staying in the U.S. just for one more question here. Then we saw at the start of this year a few bank failures, but in this higher for longer nightmare scenario that we're painting here, what does that say for financial stability? Because effectively, to me, that sounds like even more bank failures while all this is going on. Would that be fair to say?
It would. And here's where we have to think outside the box again,
Right.
because there are people who I discuss this with, and they come with me this far on the journey, and then they raise that point and they say, well, look, clearly, therefore, we're going to have financial instability. We're going to have a repeat of some form of 2008, the global financial crisis. And inexorably, interest rates will have to go all the way back down again because our balance sheet simply doesn't allow us to have higher interest rates. Now, there's a lot of logic to that, except once you've started to bring in existential matters like wars, where money doesn't matter anymore, it's all about survival. Look at Biden today talking about the fact that he wants to ask for another 100 billion to
That's
fund
right.
Ukraine, the Middle East, which I think we'll get to in a minute, and
Yeah.
potentially Taiwan. And that's just another tranche. These things are expensive. Once you start getting into that kind of territory, the dynamic shifts. And what I have been saying, including at very high levels, I've been speaking to people at a very high level on this. The more logical way to go is to recognize that because we have a completely distorted economy, not just in the US, but right the way around the world, where the West is largely about consumption and not production, and it needs to shift back without blowing up consumption completely. It needs to moderate consumption whilst having much more production. It needs much less focus on financialization. It needs much less focus on asset prices and much more focus on industrial output. That transition can't be matched with a complete collapse. Otherwise, you lose yourself, you lose the markets, you lose the economy, you lose the wars. That can't be allowed to happen.
Right.
Ergo, you need higher interest rates and you need lower interest rates at the same time. You need massive fiscal spending and you need belt tightening at the same time. That's the only logical way to address it. So how do you do that? Well, let's look at the monetary aspect on the balance sheet. You raise interest rates aggressively. You do not cut them, but you use acronyms. So, for example, we had the BTFP, where within the US only, if you've got a financial instrument, a bond, which is very underwater, and some of them are very, very underwater because of higher interest rates, you can carry that at marks, not a market value, but at par value at 100 rather than 50 on your balance sheet if you want to. Initially for a year, I think that'll be rolled out again and again and again. And not only that, you can pledge that to the Fed for a loan. Now, it's not free money, it's actually at 5.5%. But that's a lot better off than having an asset that's worth 50 cents on the dollar, which actually wipes you out.
Yeah.
So that's one way to kick the can down the road. And I think if you combine that with fiscal policy, where you will see massive injections into some parts of the economy, and I think it will be quasi QE, quasi MMT, in that it will be at pretty much zero cost.
Mm.
Whereas you have belt tightening in others, like we really don't need X, we really don't need Y.
Mm.
That gives you the only logical policy framework alongside industrial policy, which this has to be part of, and trade policy, and even labor policy is part of it too, for making that transition back to a more productive, military industrial, resilient economy, particularly in the US, which allows it to stand on its own 2 feet, even in a reduced global role, where it maybe has 50% of the world economy behind it, 70%, depending on how you look at it and how you measure it by population, by GDP, whatever. That will be what will be done because nothing else will work. And so I don't think we slash interest rates, because to do that is to say we've given up, we can't transition, we only have one model, it's failed, the US will fail, the West will fail, and anarchy reigns. Really? I don't think so. Not when we can still print money.
You mentioned how CBDCs, central bank issued digital currencies, could enable a heterogeneous interest rate market where one interest rate applied for one activity and another interest rate applied for a different activity. So maybe that's cheaper loans for green energy. I think that was the example that we used last time. But now that we're considering the possibility that the funding will be going increasingly towards wars instead, do you still hold this view?
I do, for this reason. I'm already saying bluntly that the way we've done things until now, which is we have one global benchmark borrowing rate, which is the US borrowing rate, Fed funds, which then ripples around the world and every other country sets above or below. But that's the base they're all looking to. And within every economy, there are no internal controls. So you have money coming into your economy from abroad set by the US or domestically set to the US, and it goes wherever it wants. Where can I get the highest return? What's the highest return this week? Oh, it's pictures of monkeys wearing sunglasses. There you go. What is it this week? It's corn. What is it next week? Oh, it's F-35s. It's usually not F-35s, by the way, but you get the idea. To an economy where someone says, you know what, the market is very efficient, but it's completely inefficient at actually deciding what's important. It just chases short-term profits rather than what's important for long-run stability in society and in a war. So therefore, let's say, okay, there's a credit rationing function here where we have a pool of capital that's available for the mortgage market, for example, and that's all you'll get all year, and you can't borrow offshore. So feel free. Lend it out at a low rate if you want, but when it's gone, it's gone. And so the final marginal borrower is going to have to be borrowing at a very, very high rate if they want to borrow for a mortgage in that particular calendar year. By the way, that's how we used to run every economy.
Yeah.
Every economy used to be run like that up until the 1980s. You couldn't move money internationally very easily. You couldn't. And within the economy, there were fixed pools of capital to make sure we understood what was important and what wasn't. And you know why? We were in a Cold War. Capitalism was attempting to maintain its supremacy versus global communism. We couldn't afford to be idiots and say, let's put all our money in digital pictures of monkeys wearing sunglasses, because the Soviets would have won. So anyway, that's how the world used to be. People don't know that because they're too young to know that's the way it was. But if you've got a central bank digital currency, you can achieve exactly the same thing in a more fancy, high-tech way, because the Treasury and the central bank, working hand in hand, can effectively inject capital directly where they want it to go, and they can guarantee that it's hypothecated, that if we're giving it to you for X, we know it can't go to Y because it's programmed to blow up if it moves from that hand to this hand. It can only be used for steel pipe. It can only be used for circuit boards. It can only be used to import this.
Yeah.
It's a command economy or a semi-command economy. And you know what it looks like, by the way, again, as someone who studied Marxist economics, that's how the Soviet bloc used to work. Money wasn't fungible in the Soviet Union. You had a central plan, a 5-year plan rolling, where credit was allocated via Gosbank, the national bank, and it would flow down to different enterprises where specific pools of capital were given to them only to do specific things, and the system didn't function and it couldn't be held as cash, which was fungible for any other activity. Now, it was desperately inefficient the way they did it because they had no pricing signals.
Yeah.
We'll still have pricing signals. We'll still have markets. But I suspect we will have to go down a route like this. And overnight, in Europe, they admitted they're going to press ahead with it CBDC. And they expect to launch a digital euro fairly soon. So drum roll, it's actually happening.
Yeah, it's amazing, isn't it? And I think maybe about 18 months, 2 years ago, I was just speculating, and I probably would have mentioned on the podcast, or just around how it would come about. Like I have personally a long-term view that it will absolutely come about. But in my mind, I kind of just believed, I guess back then, that we would as a people demand it. And I wondered and speculated around how we would demand it. But now it kind of makes sense that as long as everyday people actually get it as to why this is going to be so important in the new world where we might be heading towards number 3 in terms of war, I think that's going to be pretty obvious why we're going to want it, right?
Well, I think it's a logical inevitability purely because it's the historical norm. And what we had, as I said, is this freewheeling, free-flowing global capital market is a parallel to a US-centric one world global economy. I mean, you already see the Biden administration putting elements of this in place again with capital controls, into China. Like, you can't invest in XYZ in China anymore. And from a national security perspective, without taking sides, if you think of yourself as an American, too bloody right. Why should you be saying that US investors can fund your geopolitical rival and potential, maybe, future opponent, according to the Pentagon, with American pension money or private capital? Now, that does happen in countries historically. People fund their enemy. The British invested a hell of a lot of capital into Nazi Germany before World War II. Didn't work out very well. So it makes perfect sense for them to do that if they're going to be defensive. And China does exactly the same thing. They're guiding Western capital only into the sectors that are good for China Inc. and nowhere else. And part of common prosperity that people don't get is it's national security focused to try and leverage market capital into the areas that their central planning tells you are of strategic importance, and not to put it anywhere else. So not into housing, not into online influencers, not into excess consumption, into production of goods which can either maintain China's net export position, which is a form of economic strength, or build their military machine, which is a form of hard strength or hard power. And everyone else is doing or will do variations of the same, and those that don't will get steamrolled.
Sobering so far. Okay, and let's turn it up a notch here, as and it's pretty easy to do when you talk about the next topic here in the realm of geopolitics. What's your take on the latest thing here? So we have this Middle East situation, and just remember, our audience isn't shy of controversial ideas and topics, so far away. But at a general high level, what's your view on what's currently going on in the Middle East?
Well, I don't want to swear on your podcast. That would be a bit impolite, but it's a certain kind of show, shall we say, and it starts with S. It's really, really bad, because for the longest time, the dominoes have all been lined up in that particular region. You don't have to be an expert on it, and I do know it pretty well, even if I'm not an academic expert on it. But those dominoes have been lined up, and for various reasons, which I'll come back to in a moment, decisions have been taken to deliberately flick those dominoes down. And there are lots of different ways to unpack it, above and beyond the appalling atrocities that we've seen recently. Above the appallingly bad job that the mainstream media did, leaping in on one side rather than the other without waiting to do their homework, which, for the nth time in a row, shows you that you can't trust the mainstream media immediately, which is so sad. So sad, because I'm someone who wanted to be a journalist when they were young and really had the highest respect for what the good journalists I know are still trying to do. Right. But this didn't happen in a complete vacuum. It's happened alongside that breakdown of the global order that I was describing. And it's happening vis-a-vis entities like Israel, which are very much, an extension of the US internationally, or US power projection, and are therefore deliberately targeting them in the same way that Afghanistan toppled a few years ago. And just seeing, how much can we roll back? How much can we push back? How much commitment has the US really got to holding up this global power structure that it's built on multiple geographies at once? So you've got the Ukraine war. Let's extend that now to the Middle East. Let's see if we can make it a two-front war. Let's see if the US and Europe can afford that. And let's do that, leaving the door open, therefore, in Asia. Because if the US is tied down on two fronts and Europe can't do anything about it, which it can't, who's really looking after Asia? So that, I believe, is a large part of the game by various different players in the background, making tacit agreements with each other. But if we then zoom in, if this stays purely between Israel and Gaza, the market impact is minimal. No matter how bloody and awful and terrible and shocking it is, no matter how passionate the demonstrations are, from a market perspective, if it stays in that tiny geography, we're okay, globally. But we're getting many signals that it's more likely than not that it won't. That if we see Israel really go into Gaza hard on the ground, which seems imminent, that you could see Jordan destabilized. Okay, we can live with that globally. You could see Egypt destabilized. Well, that could take out the Suez Canal. That makes everything much more expensive everywhere. Much more expensive everywhere. People aren't factoring that in. Then, on top of that, of course, the big next domino is, does Hezbollah, the Iranian militia in Lebanon, open fire on Israel to make it a two-front war, to maintain a kind of an alliance or cooperative agreement with Hamas? On one level, that would unleash both the Israeli Air Force and those 2 US aircraft carriers off the coast. And I think that would wipe out Hezbollah. So maybe they won't. Maybe the US deterrent still works. And that's a throwback to the power structure that we used to have when the US was prepared to flex its muscles like that all the time. And it shows that when it stops doing it, problems happen. And when it starts doing it, problems go away if we don't escalate there.
Yeah.
But it's not just Hezbollah. Behind Hezbollah, we've got a lot of Iranian militias in Syria, in Iraq, in Yemen. And Iran itself is on the cusp of a nuclear weapon.
Yeah.
Yesterday, snapback sanctions on Iran lapsed because of the actions taken by initially the Obama White House and now the Biden White House. And listeners may be interested to know that as of today, Iran can legally buy ICBMs, intercontinental ballistic missiles, and it can legally sell them. So they can be going from Russia to Iran and then going wherever they want.
Yeah.
That's perfectly okay now, apparently, because we were trying to make this deal with Iran. So if Iran is thinking we're close to a nuke, and they are, we can now get a new supply of weapons, and the defensive perimeter around Israel, for our defense and offense at the same time, which is Hamas, Hezbollah, and all these militias around it, we want to maintain that. We don't want to see Israel cut one finger off the fist one by one with American help. They can escalate. And if they escalate via these multiple front militias on Israel, the damage will be enormous within Israel, even if it will be even greater to these militias. But they can start destabilizing global energy markets by having drones blow up Saudi oil facilities, which they did in 2019. Now, at the moment, they're shaking hands under a Chinese umbrella, which is, again, part of a shift of the global power structure away from the West, which in itself is bad for the West and one of the reasons why oil prices are where they are. But everyone knows the two still don't get along, Saudi and Iran. So, maybe they think, okay, let's have a very cheap drone, $10,000 drone that does $1 billion worth of damage to the oil infrastructure in Saudi Arabia. Suddenly we're looking at $150 a barrel oil again. Maybe there are fun and games in the Straits of Hormuz and Qatari LNG can't get out to Europe. Yeah. Europe's got an energy crisis the same as it did last year.
Yeah.
And if Iran's doing this, who benefits from that? Russia. Energy prices go through the roof. That gives Russia a hell of a lot more money to fight its war. And it also gives it a US that's tied down on another front and therefore has less material to send to Ukraine. So you have an incentive from a player behind Iran to say, go for it, go for it. And maybe even China. I mean, they generally like stability. China likes calm rather than war, to be abundantly clear. They're very different from Russia in that respect. But anything that weakens the US, not such a bad thing, particularly if it also means that they can get cheap energy from Russia anyway, which I'm sure Russia would give them in that environment. So to summarize, and apologies, I'm talking too long here, I'll let you jump in. But if it's Israel-Gaza, no effect. As soon as Israel goes into Gaza, we get dangerously close to the next domino toppling. And if that domino topples, you can make a logical case that every other player there has an incentive to escalate rather than de-escalate. And that includes Israel, that includes the US, that includes Hezbollah, that includes Iran, that includes Russia, maybe that even includes China. At which point, who wants to de-escalate? I don't see anyone.
Yeah, I totally agree. And I can kind of see it happening. And I've got in front of me a quote here from Napoleon: never interrupt your enemy when he is making a mistake. And in the back of my mind, I'm just thinking of China, right? Like, they've been pretty quiet, pretty chilled throughout this entire time, and they don't need to do anything. It's all happening for them, if indeed there is some sort of grand strategy, which I'm hinting at, of course.
I think much of it is Iran directly agitating for itself, because it's in a position of relative strength now compared to where it has been.
Yeah.
And it smells Western weakness. I mean, an example of that, as I said, the US, despite the fact it's got 2 aircraft carriers off the coast, allowed that sanction to roll back, which means Iran can buy ICBMs. How is that even possible?
Yeah.
And I'll come to that in just one second, by the way, a juicy factoid that maybe people aren't aware of. And also the White House proposed rolling back sanctions on Venezuelan oil, which shows that they're worried about the oil price. And people may not know, but Venezuela is an Iranian ally. So Iran can smell weakness there. But the factoid is this. The Obama shift to Iran, and people are probably thinking, why did that happen? And the Biden continuation of the Obama shift to Iran was a foreign policy choice taken at the very highest level. And it was based on the fact the US doesn't want another Gulf War. They don't. And everyone can understand why. They don't trust Israel to be the regional hegemon because they're not popular enough in the region and they think they're a bit too aggressive. And you can see their point. And Iraq's a mess which they ruined. So they were looking around the region and they thought, someone's got to run it for us. How about Iran? They've got the brains, they've got the oil, they've got the population, they've got the historical empire, they've got the know-how, they know what to do. And that's been, the Obama plan, make friends with Iran. That was the Biden plan, make friends with Iran. And it's really clever if you don't know anything about Iran, which is they're a radical Shiite regime, who are totally revolutionary, who on a daily basis burn the American flag and the Israeli flag. So you wonder, how did the Americans think this above and beyond wishful thinking? And here's the factoid. And feel free to do your own research on this because you won't believe me probably when you hear it. You have to actually research it. The instigator of this plan was a guy called Robert Malley, Malley. He was current Secretary of State Blinken's high school buddy and his college roommate. So thick as thieves. Malley's kind of stepfather, as in, godfather, not legally, but, a big family figure, was a senior Palestinian resistance leader. He came from a very progressive circle. Fair enough, not that unusual. But he's currently not in his official role, and he's being investigated for, drum roll, being an Iranian agent.
Wow.
And anyone who knows the Middle East, and that's everyone in the Middle East, has looked at US policy in the Middle East under Obama and now under Biden again, and thought, you either can't find your backside with both hands, as we say in English, in a slightly ruder version, or you've got an Iranian agent running your policy. You cannot possibly be doing what you're doing and know the Middle East and not be working for Iran. It just doesn't make any sense. You're either a completely naive utopian, which is sometimes possible in American foreign policy, or someone else is steering the vehicle. And it looks like it was a combination of both. And only now are we starting to see them try and pivot away. But they don't want to go back to what Trump was doing, because why would a Democrat carry out a Trumpian policy? Which, again, I understand within the US domestic sphere of things.
Wow.
But it underlines why the US is in such a mess there, and why, Iran feels empowered, and why, therefore, it probably isn't China, stirring the pot on this. They're watching other cooks do that in this region.
That's right.
But what China is doing, I mean, they had the Beijing Belt and Road shindig yesterday and the day before. You had 130 countries rocking up. Putin, Iran, the Taliban were there, all smiling, holding hands, all talking about building a new world order. The Western press didn't even cover it. We couldn't even bother to cover it. We're so busy talking about what house prices are doing. We're so obsessed with our own minutiae that we didn't notice that 130 world leaders got together to talk about, okay, how do we change the world? And I'm not saying that some of the things we're focusing on don't have some justice or some social justice. There are lots of things you can talk about where there are rights and wrongs in the world that we should be addressing. But the rest of the world is prioritizing very, very different things. And we could have a whole hour discussion about this. If we get these things wrong, and Western power, which comes from raw power, trust me, it doesn't come from the fact that we're nice or we're better. It comes from raw power. If Western raw power is rolled back, our living standard drops calamitously. Because you look at some Western economies, and if it weren't for the fact that we value their currency at X rather than Y, you'd say, well, that looks pretty much like a banana republic. What value do you actually add? You run a huge trade deficit. You don't really do very much. You speculate on asset prices rather than producing things. And it's only because, historical market mechanisms price your currency here, not here, through the floor, that you have the living standard that you do. And you're probably thinking I'm talking about America. I'm thinking much more about countries like the UK or Australia. It's in the West's interest to make sure that they focus on what the priorities really are. Yes. But I can tell you, it's very hard to get politicians and civil servants to understand this.
Well, it's very hard to get everyday people to understand it, because the only thing that people are really concerned about still, probably, I'm guessing, even just listening to our conversation right now, will be, well, what effect does this have on my mortgage rate? And what about my house price? And will I be able to go overseas like I always have been and maintain my standard of living? But I guess what you're kind of saying is that, hey, there's a season for everything under the sun. And maybe this is a season where we put away little things and we start looking at big things, right?
Well, to put it even more bluntly, if we don't get the big things right, all those other things you're worrying about just won't matter in the slightest. But that part and parcel of that is to recognize that the way that you get wealthy, and I think this is probably a good segue to what most of your listeners are most interested in, which is not what I'm waffling on about. The best way to get wealthy for the past 40 years has just been to buy assets.
That's right.
Property's been a very, very big one in particular. I mean, I can't tell you how many economies I work in and visit where the fascination with property is almost like a religion. The news section of the paper is like an inch thick, and property section is 2 inches thick on top. That's gone. Anyone who doesn't realize that we're not in a world anymore where you're going to make money just from buying a piece of land or a property on a piece of land and think, well, that's what will get me rich. You don't understand what I'm describing, because A, the interest rate won't let you do it, but B, gradually the powers that be will come to recognize that, no, we need more factories making X, Y, and Z with more high-paying jobs, which, by the way, will hold property prices up. They'll stop them collapsing. They'll hold them up. They won't allow them to become a substitute. That allow us to then actually defend ourselves and be resilient and sustainable, because you can do it in a green way too, which is good. But if we don't do that, you might as well say they're two cavemen sitting in a cave, telling each other, well, I think this year my cave's worth 5,000 shells. And the other one says, oh, no, I think next year it might be worth 6,000 shells. It's like you're cavemen sitting in a cave with shells. That's effectively what you are. You have to have something real behind it. And I think gradually that will sink in at the highest level, and then that will over time flow down. But I'm in Australia today in a hotel room, which is why the backdrop's a bit odd. There are some countries which will be dragged there kicking and screaming, and Australia is absolutely one of them, because all anyone is interested in is the price of housing.
Well, come to New Zealand as well, and then
oh my god, you're just as bad. It's my god, housing, comma housing.
Yeah,
as if that's what's going to maintain, your long-run national security.
Yeah, could talk all day with you, but we'll keep going. I just have a couple more questions just to throw at you, and I think probably even this might just be tying a bow in it. So effectively, what you're kind of saying is that there is mounting evidence that no matter which thread you pull on, it all leads to this fact that there is a shift in a 40-year-long trend of declining interest rates with lower highs and lower lows that may clearly be on a shift. Would you unequivocally say that?
Absolutely. That doesn't mean we go back to the 70s level of interest rates, which some people say, oh, it's the 70s. No, it's something different. But we are now in a higher for longer paradigm. And if we are to go back to a lower for longer one, I am not even willing to describe what that scenario looks like.
Yeah.
Because if you're going to get a GFC and a GFC policy response of here's free money for everybody on top of the weak economy we have now, the polarization we have now, the geopolitical backdrop of Russia rubbing its hands and thinking what that would mean for energy prices, and the fact that China probably wouldn't sell you stuff. And they say, well, here's printed money. Can I have more of your stuff? No.
Yeah.
The disruption, it just doesn't bear thinking about.
Yeah. Okay. That's a good slap in the face. Okay. Well, I'm standing up and I want another slap. So, what does this say about passive investing? Because in my mind, I'm thinking again, the reason why the tide lifts all boats potentially over the last 40 years in particular has been declining interest rates. And so, would I be correct in saying that this introduces potentially a new risk for the passive investment methodology?
Yes and no. I mean, it depends who's doing the investing for you, to be blunt. I mean, if you're dealing with a fund manager without knowing it, who knows what they're doing, yes, you're still sitting pretty. But speaking as someone who does have conversations with fund managers from time to time, even though I don't run a book like that and I'm not a money manager myself, very few get it. Very, very few get it. Because if you're talking about the traditional fund management system where you put a couple of $100 aside a month, it goes into a pension, that pension fund manages it for you. Those pension funds are interested in the size of the AUM, the assets under management that they're managing. They won't tell you that you're in a higher for longer interest rate paradigm where they have to, be completely restructuring a traditional portfolio, because A, it's never happened in their professional lifetime. And B, if they turn around and say, look, we think rates are going to stay at 5.5% for the next 2 years, why bother investing with them? Just put it in cash. At which point AUM shrink, at which point they don't have a job. So you're not going to get any honest answers out of them. And the whole industry is completely compromised by the fact that it's a perpetual motion machine, which has to see more capital coming in. Ergo, it has to keep saying, rate cuts soon, which means stocks go up, and it means that, bonds go up, but you don't want to put your money in cash. Because if the message is high rates and high real rates for the next, X number of years, don't really need them. But if you've got a fund manager who does know what they're doing and can see this paradigm, and there are a few out there, not very many, but there are a few, then you'll do handsomely. Don't do what I did, which is pick one who says they're going to do a good job for you. And when I finally cashed in a pension recently, I got a 1% return every year that was in there. 1%. And 18 months of that was with high interest rates. So I think they got it all at the end. Yeah. Don't do that. You're not going to retire happy from that.
That's the best investment advice so far. Okay. All right. Just one more question before we finish up. And this is really more I'm just curious now, again, with your role. You're one of the few voices that I've noticed that has consistently been speaking freely in an increasingly constrained world, you could say. Sometimes those constraints are put on ourselves. And I wonder, like you working for Rabobank, obviously you're not super free to do anything you want, I would assume. How do you get away with speaking your mind so freely like this?
I ask myself that question every day. No, I mean, in all seriousness, Rabo is a wonderful institution. I have a fantastic boss, and he has a fantastic boss. And obviously, I'm a colourful character. But when you've got a role which is, cross-asset, cross-geography, cross-disciplinary, by necessity, you're trying to look for a bigger picture and join threads. And some of them sometimes, when you join those dots, they sketch out a picture which is really highly, highly uncomfortable and awkward. And yes, there are still areas that I don't go into deliberately because it's just not my area. Or there are ones which, no one goes into because it's not part of markets. Fair enough. But far more of the things that we see around us, directly or 1 or 2 stages removed at most, have far more impact on the nuts and bolts of not just investing, but of the real economy where Rabo is based in the agri sector.
Yeah.
Then you realize, like, if you take everything I'm saying here and you bring it down to the fact that, you should be hedging your rates exposure because rates are not likely to come collapsing back down again, and you're a farmer with a large mortgage, that's advice that's valuable both to the client and to us as a bank, because we want you to do well, because if you do well, we do well. And if, for example, you listen to everything I'm going on about Robert Malley, and, there's an Iranian agent in the White House, and your head's spinning. And I say, but at the end of the day, that means if you look at the balance of risks, because of policy mistakes for many of the last few years, you should be hedging your energy exposure to make sure that if diesel prices go through the roof, your farm is still operating fine. Thank you very much. So you're doing okay, but your competition is hurting, and you therefore do even better because you win twice.
Yeah.
That has value, but you can't get to that without having done all the other work. Now, can I just not say any of that and just say hedge your energy exposure? Yeah. Can I just say hedge your rates exposure? Yeah. But don't you want to see the workings? Don't you want to see how I got there? Maybe you don't. Maybe you don't need me. Maybe someone can do this job, with an algorithm now, and AI will replace me fairly soon. I'll,
I
I'll go and look
doubt
out.
that very
I'll
much.
go and look out the window and be depressed and drink cups of tea by myself. But
Like a good Englishman.
yeah, exactly. I would like to think that there's some value being added there, and I would hope that your viewers and listeners might feedback to you whether they do or don't find any value in it.
I guarantee you they will. They're used to it, and they love seeing the workings of how you arrive at conclusions, and I certainly have as well. So thank you very much, Michael Every, global strategist for Rabobank. Thanks very much.
Thank you. Have a great day. Bye bye.
You too. Cheers.